Hello everyone. Welcome to the Stock Minds web channel. Novo Nordisk, NYSE, NVO, the Danish pharmaceutical powerhouse, continues to balance robust growth with attractive valuation, even with the declining of its stock price. The Q2 2025 earnings reveal strong top-line and bottom-line expansion, while its valuation metrics imply the stock may be undervalued relative to its growth potential. In this video, we will dive into Novo Nordisk recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Novo Nordisk. Founded in 1923, Novo Nordisk is headquartered in Bagsværd, Denmark, and operates globally in diabetes, obesity care, and rare diseases. It is best known for its blockbuster GLP-1 therapeutics Ozempic for diabetes and Wegovy for obesity, and is the largest pharmaceutical company in Denmark and one of Europe's most valuable companies. Its mission extends to combating serious chronic diseases and leveraging sustainability, supported by R&D, smart solutions, and global penetration. Novo Nordisk financial performance. In Q2 2025, Novo Nordisk reported revenue of $12.13 billion, a 24.15% increase from $9.77 billion in Q2 2024, while earnings per share (EPS) rose to 94 cents, up 46.88% from 64 cents a year earlier. On a trailing 12-month TTM basis, revenue reached $49.25 billion, representing a 32.95% increase from $37.05 billion, and EPS climbed to $3.94, up 36.81% from $2.88. Free cash flow per share, TTM, also improved modestly by 3.3%, reaching $2.19 compared to $2.12 in the prior year. Profitability remained exceptionally strong, with a gross profit margin of 84.26%, net profit margin of 35.61%, and free cash flow margin of 8.48%, supported by efficient returns with return on asset of 23.04% and a remarkable return on equity of 79.17%, while maintaining a healthy debt-to-equity ratio of 0.59. Over the past 5 years, Novo Nordisk has grown its revenue at a 22.1% CAGR, net income at 24%, and free cash flow at 8%. Novo Nordisk has been growing consistently at a double-digit rate and is still projected to grow at a double-digit rate in the near term. Novo Nordisk Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue of $50.05 billion, a 23.58% increase from $40.5 billion in 2024, and EPS of $3.84, up 21.71% from $3.16. Despite a consensus hold rating, analysts set an average price target of $67.10, implying 28.03% upside, with the most bullish target at $105.06, suggesting potential gains of over 100% from current levels. NVO stock price performance and valuation. At the time this video was created, the stock was trading at $52.41 per share. Novo Nordisk stock has declined 61.9% over the past year, significantly underperforming the S&P 516.3% gain in the same period. Over the longer term, the stock has risen 59.3% in the past 5 years, but this still trails the S&P 591% growth. Despite this recent weakness, the stock offers a 2.25% dividend yield, providing steady income for investors. From a valuation perspective, Novo Nordisk trades at a price-to-sales PS ratio of 4.61 TTM and forward PS of 4.54, as well as a price-to-earnings PE ratio of 12.97 TTM and forward PE of 13.64, levels that appear attractive relative to the company's strong earnings growth and high profitability. While the price-to-free cash flow PFCF ratio is 22.22. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS forward PE, and PFCF are all below the average. This indicates that Novo Nordisk stock is trading below its 5-year average level, especially when looking at its forward PE. This shows that Novo Nordisk stock may be undervalued, as its business is still projected to grow at a double-digit rate in the future. Novo Nordisk growth potential. Novo Nordisk growth prospect remains robust, driven by several factors. 1. Leadership in obesity and diabetes segments. Obesity care continues to be the cornerstone of Novo Nordisk's growth, with revenue in this segment growing more than 50% to reach 20.4 billion Danish kroner. This impressive surge is primarily driven by the flagship drug Wegovy, whose sales soared approximately 75% year-over-year, reflecting strong demand. Complementing this, GLP-1 diabetes treatments like Ozempic have also contributed significantly to revenue growth. However, the pace of GLP-1 sales growth has moderated due to heightened competition and market saturation challenges. On a global scale, obesity care sales have expanded rapidly, signaling widespread demand beyond the United States. As lifestyle-related metabolic diseases increase worldwide, Novo Nordisk's dominance in obesity and diabetes therapeutics positions the company well for continued growth. 2. Strategic restructuring and cost efficiency. Facing increased competition and market challenges, Novo Nordisk undertook strategic changes, including restructuring its research and development as well as commercial operations. Under the leadership of the new CEO, the company focused on improving cost efficiency and strengthening commercial execution, which contributed to operating profit growth between 29% and 40%. These initiatives helped counterbalance the negative effects of declining insulin sales and rising expenses related to investments. Novo Nordisk's emphasis on innovation, expanding its product pipeline, and broadening its global presence highlights its agility and commitment to sustainable profitability. These strategic adjustments aim to protect profit margins while paving the way for upcoming product launches. Through this proactive approach, Novo Nordisk is positioning itself to stay competitive and maintain leadership within the evolving biopharmaceutical industry. 3. Innovative product pipeline and market expansion. Novo Nordisk's product pipeline is a key driver of its long-term growth potential. The company is advancing several promising candidates through ongoing Phase 3 trials, including CagriSema, while also seeking expanded approvals for existing drugs like Wegovy. These efforts underscore Novo Nordisk's commitment to next-generation therapies targeting metabolic and obesity-related conditions. Additionally, the company is expanding its global footprint, with international sales growing faster than domestic markets. Its rare disease treatments have also experienced robust double-digit growth, boosting diversification. Nonetheless, the company's future success depends heavily on the timely release of new clinical data, regulatory clearances, and its ability to outpace competitors. Continuous innovation remains essential for Novo Nordisk to maintain its leadership position, turning its research pipeline into commercially successful, high-value treatment options in an increasingly competitive pharmaceutical landscape. Risks to consider. While Novo Nordisk stock become cheap and attractive, we should be mindful of potential risks. 1. Slowing growth and lowered guidance. Novo Nordisk significantly lowered its 2025 sales and profit growth forecasts due to weaker than anticipated demand for its key products, Wegovy, obesity, and Ozempic diabetes, particularly in the U.S. obesity market. This disappointing performance led to a sharp decline in the company's share price and market capitalization, reflecting investor concerns over slower growth prospects and the challenges facing these flagship drugs amid increasing competition and evolving market conditions. 2. Heightened competition. The obesity and diabetes drug markets face intensified competition, especially from Eli Lilly's Mounjaro and Zepbound, which have rapidly gained market share against Novo Nordisk. Additionally, compounded generic versions of semaglutide have proliferated due to pharmacy loopholes eroding Novo's sales. Despite efforts such as major insurer deals and legal actions against compounders, this heightened competition continues to pressure Novo Nordisk's growth and profit margins. 3. Over-reliance on GLP-1 drugs. More than 90% of Novo Nordisk's revenue comes from its diabetes and obesity care segments, primarily driven by GLP-1 related products like Ozempic and Wegovy. This heavy reliance on a narrow product range exposes the company to significant risks. Any slowdown in growth, competitive pressures, or regulatory setbacks affecting these key segments could severely impact Novo Nordisk's overall financial performance and future prospects, highlighting a vulnerability in its business model. Conclusion: Novo Nordisk demonstrates a rare balance of strong growth and compelling value. Despite sharp share price declines over the past year, the company's Q2 2025 results highlight impressive revenue and earnings expansion, supported by world-class margins, high returns, and a healthy balance sheet. With a growing global demand for obesity and diabetes treatments, plus an attractive dividend yield and undervalued earnings multiples, Novo Nordisk remains a promising long-term investment opportunity for patient investors seeking both growth and stability. But remember, this is not a financial advice. What do you think about Novo Nordisk? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.